Hi everyone, welcome back to the channel, and if you're new here, I'm Paula, and today I want to slow things down a little because the last week for Ripple and XRP has been busy, but more importantly, it's been meaningful. Not in a hype-driven way, not in a price went vertical way, but in a structural, long-term, this changes how institutions see Ripple kind of way. And when news like this comes out, it's very easy to do one of two things. Either you jump from headline to headline without context, or you dismiss it because the price hasn't reacted dramatically yet. Neither of those approaches really helps. So instead, I want to zoom out and walk through what actually happened this week, how all of these stories connect, and what they tell us about where Ripple and XRP now sit in the global financial system. Because when you pull all of these together, it tells a very clear story. For a long time, Ripple has been described as a crypto company trying to integrate with traditional finance, trying to work with banks, trying to navigate regulation, trying to prove legitimacy. This week, they made something very clear. That phase is over. Ripple isn't trying to be included anymore, it's being integrated. Let's start with what is arguably the most important headline of the week, even though it didn't get the loudest reaction. Ripple received conditional approval from the US OCC to launch its own national trust bank. Now, this isn't just another crypto license. A national trust bank charter places Ripple inside the US federal banking framework, not just adjacent to it, not operating around it, inside it. This is the same regulatory structure used by institutions that custody assets, manage trust products, operate under strict federal oversight, and the key word here is trust. Because for years, one of the biggest hurdles for crypto companies hasn't been technology, it's been credibility. This approval signals that regulators are willing to allow Ripple to operate under the same rulebook as established financial institutions. That's not Ripple avoiding regulation. That's Ripple opting directly into it. It's also important to understand that Ripple wasn't alone here. Alongside Ripple, firms like Circle, BitGo, Fidelity Digital Assets, and Paxos were also approved or allowed to convert into nationally regulated entities. This tells us something bigger is happening. Regulators aren't just reacting to crypto anymore. They're building a formal crypto banking layer within the existing system, and Ripple is now part of that layer. That matters more than any short-term price move. Now, while that was happening on the regulatory side, something equally interesting was happening on the capital side. Vivo Power launched a $300 million institutional investment vehicle focused specifically on Ripple's equity, not XRP, Ripple the company. This is a really important distinction. This fund is designed for institutional investors, and it's backed by Lean Ventures, a South Korean asset manager that manages capital for both private institutions and government-linked entities. This isn't speculative retail money. This is long-term structured capital looking for exposure to Ripple as a business. And institutions don't do this unless a few boxes are already ticked. Regulatory clarity, business longevity, a clear growth plan. What this tells us is that demand for Ripple exposure is expanding beyond public token markets and into private institutional structures. That's a sign of maturity. At the same time, we saw the 5th spot XRP ETF go live, this time through 21 shares. Now, ETFs aren't exciting in the way memes are exciting, but they matter far more. ETFs are how serious capital enters markets. They reduce friction, they expand access, they normalise an asset. One ETF might be an experiment. 5-spot ETFs tells us asset managers believe there's an ongoing demand for XRP exposure, not just a one-off trade. And importantly, ETFs change who can hold an asset. Pension funds, wealth managers, institutions that simply won't touch spot crypto. Each ETF quietly widens the door. And if you're wondering whether Wall Street is actually paying attention, this week gave us a very clear answer. Bloomberg ran a piece titled, "How Ripple Quietly Convinced Wall Street." That headline alone says a lot. According to the report, Ripple raised $500 million at a $40 billion valuation, attracting investors linked to Citadel, Brevan Howard, Pantera Capital, Galaxy Digital, and Fortress. But what really stood out wasn't the names. It was the structure of the deal. These investors weren't just buying upside. They were offered downside protection, terms that allowed them to sell shares back to Ripple after a set period for a guaranteed return. That's not speculative behaviour. That's institutional, risk-managed positioning. It tells us these investors see Ripple as a long-term infrastructure company, a business with durable revenue, and something worth structuring capital around, not trading emotionally. That's a very different lens than most crypto projects ever get viewed through. At the same time, Ripple has been aggressively expanding through acquisitions. They finalised the acquisition of Rail, a stablecoin payments firm responsible for roughly 10% of all B2B stablecoin transaction volume globally. That's not a small addition. That's core financial plumbing. Earlier this year, Ripple also acquired Hidden Road for around $1.25 billion, a multi-asset prime broker, now rebranded as Ripple Prime. When you zoom out, a very clear strategy emerges. Ripple is building banking access, custody, stablecoin infrastructure, prime brokerage, cross-border payments. This isn't a crypto startup roadmap. This is a full-stacked financial services build-out. And this isn't limited to the US. In Europe, Amina Bank became the first European bank to adopt Ripple's payments, enabling near real-time cross-border transactions for crypto-native clients. Again, this isn't theoretical adoption. This is actual banks using Ripple's infrastructure to move real money. And that matters, because infrastructure adoption doesn't move fast, but it sticks. Now, whenever Ripple news appears, the same question always comes up. What does this mean for XRP? And this is where the nuance matters. Ripple, the company, and XRP, the asset, are not the same thing, but they are connected. As Ripple expands regulated banking access, liquidity rails, custody, and payments infrastructure, XRP becomes easier to integrate as a bridge asset, not guaranteed, not automatic, but easier, and critically more acceptable to institutions that care about compliance, auditability, and regulatory clarity. This week wasn't about XRP price. It was about positioning, and positioning always happens before price reflects it. Some people will point to large XRP wallet movements and jump to conclusions, but large transfers don't automatically mean selling. They're often internal wallet reorganizations, liquidity provisioning, custody movements, preparation for institutional flows. This is exactly why context matters. So looking at one data point in isolation almost always leads to the wrong conclusion. So when you step back and look at everything that's happened this week, what's the bigger picture? Ripple is no longer being treated like a speculative crypto company. It's being treated like a financial infrastructure, and infrastructure plays by different rules. Infrastructure doesn't move fast, it doesn't hype itself, it builds quietly. But when adoption reaches a tipping point, it doesn't ask for permission. This doesn't mean XRP goes vertical tomorrow, it doesn't mean price explodes next week, but it does mean the foundation looks very different than it did even a year ago. And weeks like this, where multiple independent institutional signals align, are rare. This wasn't one announcement, it was a pattern. So the real question isn't why hasn't price reacted more? The real question is, how often do you see an asset transition from regulatory uncertainty into institutional normalization? Because historically, that transition only happens once. So when you look at a week like this, the most important takeaway isn't excitement, it's clarity. Because markets like this don't reward people who chase every headline. They reward people who understand where we are in the cycle, how liquidity actually moves, and how to stay positioned without getting shaken out emotionally. And that's why I always say, you don't need to trade more right now, you need to think better. You need a framework that works in quiet, uncertain markets like this. That's exactly why we built the Crypto Liftoff course. It isn't about signals and it isn't about hype. It's the exact approach we use behind the scenes to navigate both the bull markets and periods like this, where patience, structure, and risk management matter far more than prediction. If you want to understand how we actually approach the market, from macro context to market structure to execution, the link is in the description below. No pressure, it's just there when you're ready to go deeper. And if this video helped you zoom out to see the bigger picture, give it a like. It really helps get this kind of content in front of more people. Subscribe if you want calm macro-led crypto analysis without the noise. And drop me a comment below. I'd love to know whether you think the market is already underestimating what Ripple is building, or whether you think price still has more time to catch up. Thank you so much for watching, and I'll see you in the next one.